Hey everyone, Greg coming at you here with a quick Monday market update. I hope that everyone's doing well on this first day back at school, and it does look like we're getting a little bit of sunlight, which is nice. I think the last full day of sun here in Hamilton was December 21st, so this is a welcome change. So happy New Year to everybody. We're going to start off with a little bit of a success story here. We are standing outside of our listing over at 59 East 21st. This did sell successfully over the weekend conditionally to a first-time buyer, so congrats to them and congrats to our sellers. And the reason that we're starting out with this success story is because this house was previously listed with out-of-town agent from our brokerage, was not having any luck with the market, reached us to us. We took over the listing and were able to sell it successfully about a month and a half later. So thank you very much for that referral, and congratulations to all other agents involved. We are very, very thrilled. And some market predictions coming up in January. Rather than getting into the stats and the nitty gritty, we'll talk about what's going on out there. So a couple factors. The market that we are currently in right now does remind me a lot of last year, not for the pricing reason, but for the timing reason. The sellers who were able to do extremely well last year got ahead of the spring market. So folks that were able to be sold firm before March break generally will obviously outperform everybody who came afterwards. And I do think that's the case here. We're 30 to 35% off last year's peak. And I do think there is further room to go. So if you are a seller and you are thinking about listing your house, now is the time. I do think that there is still room for prices to come down for a couple reasons. Number one, we will likely see another interest rate increase in January, which is further pushing the qualification rate higher. So right now for a mortgage, you have to qualify over 8%, anywhere between 8 to 8.25. Remember, you have to be 2% above the posted rate. So what that means, if you buy a $700,000 house, you put 5% down, you're carrying, say, a $700,000 mortgage here in Hamilton, and you have to qualify at 8%. That means the bank is looking at you as if you have to pay $56,000 a year just in interest. That is, an entire salary, basically. So you have two people earning that. That's going to gobble up one person's salary. Very difficult to qualify at that, which means that prices will have to continue to come down in order for people to qualify. Secondly, this also has an effect on things like, renovations and building. It's going to be very, very difficult for businesses, builders to acquire financing at these higher rates to increase the supply. Now, we do have new housing rules coming out. We've seen that before. We have the home buyer ban, foreign home buyer ban, and the anti-flipping tax, the vacant home tax. All this stuff really is just window dressing. I do not think this is going to address the critical supply issue at all. And we have the interesting stat as well. Canada welcomed the most amount of new Canadians last year, and the feds are looking to increase that number. So, we have these two forces, looking to bring 500,000 more people in with a critical supply housing shortage, and a foreign home buyer plan and increasing interest rates. So, definitely will make it difficult for both sellers and buyers. Now, sellers, like I said, if you have the ability to get your house on before the spring market, you're looking to make a move because you have to, do it now. Get ahead of the market. We're still nowhere near the supply that we need. And for buyers, yes, prices are coming down, but interest rates are very, very high. So if you do see a house, if you do have that qualification and that rate hold right now, now's the time. Just like last year. So during the peak of the market, people were pricing in increases in their offers for the long term. So, people were willing to pay more for a house because they believed prices were going to go up 6 to 12 months. Buyers, if you see a house that's been sitting on the market for 100 days, go for it. You can lock it up with conditions, go do your due diligence. Sellers are willing to accept a little bit less, especially if their house has been there. So I hope that you found this video very, very helpful. If you have any questions about your unique real estate situation, as always, reach out. We're happy to discuss anything with you. We do have several new listings coming out for you this month, and many active buyer clients as well. So any questions, hit me up, shoot me a DM, email, carrier pigeon, however you like to communicate. Happy New Year, everybody. Looking forward to working with you all in 2023. Hope it's your best year ever. Bye for now.